Okay, the stock we are going to look at today is Whirlpool with ticker symbol WHR for the Halloween edition. I'm sure most of you know about Whirlpool, a market leader in household appliances. They've been supplying home laundry appliances to Sears for more than 80 years under their Kenmore brand name. And as you can see here, the last quote from Friday was $51.97. As you can, and here we have a table of their historical earnings per share for the last 7 years. And if you take the average of their earnings per share for the last 7 years, you will be able to determine that currently Whirlpool is trading at a 7-year average PE ratio of 8.2. So that's very cheap, and anything under 10 would be cheap. So that makes them interesting from a valuation standpoint. You'll also notice the current dividend yield is 3.3%. And another thing that seems that that makes them seem interesting from a value perspective is if you look at their 2010 book value that I show here, it's $55.61, which means that currently Whirlpool is trading for less than book value. But there is reason for that, as you can tell from this chart of the last several months, Whirlpool had been in a downtrend for the last few months, similar to the general market due to European debt concerns as well as problems in the US, high unemployment, and also debt issues. So, but you'll see at the beginning of October they broke out of this downtrend. You can see the downtrend line in blue here. They broke out in October just like the general market did. But you'll notice Friday there was this big drop, 14 or 15% drop on Friday in a single day. And the reason for that is they had their earnings announcement in which they reported that earnings of $2.35 per share, while the street was expecting $2.75 per share. And revenue came in at 4.6 versus the estimate 4.76 billion. So that's the reason for this 14-15% drop here. Some additional negatives recently, Goldman Sachs actually had downgraded Whirlpool from neutral to sell on October 18th due to increased competition from Samsung and LG, as well as supply increases in Brazil. Actually, 22% of sales are from Latin America, about 19% from Europe, and about 56% from the US. An additional negative that's actually been a negative for quite a while is a bad housing market. Of course, if the housing market were to ever improve, that would be positive for Whirlpool, as that's one of the main drivers for their appliance sales. But it seems that considering the current PE ratio and that they're actually trading at less than book value, that this downward move here may have been somewhat overdone, and they seem to be cheap at current levels. But as you can see, this 14-15% drop resulted in a negative crossover for the MACD technical indicator, as well as a negative crossover for the slow stochastic here. So you could wait for these technical indicators to indicate a buy entry, or you could invest half the amount, half of the total you want to invest somewhere around the current levels here, and then should they drop lower, invest the other half. But it seems like at this point that the downside risk, considering the low PE ratio and the trading at less than book value, that the downside risk shouldn't be that bad. But of course, the market sentiment could drive it lower, even possibly testing these previous lows here, which would still be a significant drop. So that sums it up for this edition. So signing out, farewell and good luck, and don't forget to check the blog with the address here for future